I want to welcome everyone and thank you so much for joining this workshop. My name is Gabby Dionish and I am the marketing manager at Showdigs, and I will be your moderator today. We have a really great workshop planned for you, but before we start, just a couple housekeeping notes. First, this webinar is being recorded, and a link to the recording will be sent to you in addition to the entire presentation. We will be managing the chat and Q&A, so please feel free to use those at any time during this presentation to submit any questions you might have. And at the end of the presentation, we'll have an open Q&A where we'll get to all your questions. So next I want to just introduce you to Showdigs in case you're not already familiar. So we're a prop tech startup and we help busy property managers manage and scale their businesses by providing on-demand tours and condition reports handled by our amazing network of local licensed real estate agents. So as an agent, why would you want to join Showdigs? Well, it is a great source of supplemental income. So we pay a flat rate for every single tour you do. We even pay for no-shows. It's also super easy to fit us into your schedule. We actually only notify you of tours that are nearby so that you can decide which tours you want to accept and which tours you want to fit into your day. And then lastly, it's a fun way to build your network and your experience. You can learn your area even better, get great practice showing rentals, and plus, we actually encourage you to leave your card with prospects in case they're looking to buy in the future. So if you're an agent, definitely check us out and sign up if you're not already with us. And then if you're a property manager or an agent, be sure to follow us on social media. We're on Facebook, LinkedIn, YouTube. We post a bunch of really good resources and you'll be able to know when our next upcoming webinars are. So now I want to just introduce you to Formations and the Formations team. So Formations is a FinTech startup and they offer realtors a complete financial management solution to maximize the financial potential of their businesses and improve their financial well-being. So I want to introduce you to our guest speakers today, Shahar and Brian. Shahar is a tax and accounting expert with over 15 years of experience in the field. He's managed thousands of clients, tax returns, business structures, and S-Corps. And before he founded Formations, he built a successful tax accounting practice right here in Seattle, serving over 3,500 clients. And Brian here is an experienced tax consultant with a demonstrated history of working in the accounting industry and educating professionals new to taxation. He is skilled in solving complicated tax reports and in risk management. Brian spends most of his free time working in his garden and enjoying the outdoors. So without further ado, I will hand it over to the Formations team for this awesome webinar. Go ahead, you guys.
Hey, Gabby, good morning. Thank you so much for having us. Good morning, Kobe. Also great to see you. It's a pleasure to be part of the Showdigs network. Brian and I are here this morning to share as much information as we can and educate our audience around interesting tax and accounting solutions and tricks and ideas that can still be implemented before the end of the year. And the main idea is, again, that business owners, as they think about their financials more seriously and take their financials in their hand, there is a way to save money. There is a way to keep more money in your pocket. And this is the whole idea of Formations, and we'll speak about Formations later, but what we want to encourage people, I know that tax and accounting is sometimes it's a complicated language, or you don't know kind of how to ask the right questions. So one, we set a lot of questions through the presentation, so it will help you kind of to get into the cadence and the language and into our world. But also feel free to use the chat, ask questions. There's no really need to a specific grammar or to be really precise. We can pick up on concept and subjects, and the idea is that this is an interactive session. We want to share as much as we can information to help you to be more successful. We usually start the discussion by letting people know that self-employed, and our mission, Brian and myself, is to educate a segment that most of the time is not aware of many great benefits, around you. So as a new business owner or as an existing business owner, we want you to make sure that, there are three things that are always, in your mind. One, believe in yourself. Believe in yourself. 2020 was an interesting year. 2021 will be even more, in our opinion, opportunistic, and tons of opportunity in front of us. I believe it's a really bullish and year to make investment, to go, double deep on your industry. Second, believe in your business. Build your business as a business. Treat it as a real, entity that can support for yourself. And don't kind of make it as a hobby. Just invest all in the business. And third, trust the system. We have a great system. We're specifically speaking about the tax and accounting world that has a really interesting concept that once you adopt it, you can be really successful. And we say, you can pursue your dream as a self-employed, but you don't necessarily need to be penalized financially for it. Actually, there's a great benefit in the tax world to keep more money in your pocket. What we'll cover today, we'll cover, few items that we feel are really critical for the next couple of weeks before the end of the year. If you implement some of what we're saying or what we're asking you to do, you really will keep money in the pocket. This is not a discussion about some virtual currency or some fluff. This is real money that you can keep in your pocket and don't send it to the IRS. Usually the money that you send to the IRS is not coming back. So really strong ideas. Again, because it's only 2 weeks and we can do so much, we already want to kind of implement ideas for you for 2021 and what you can do for the year coming. Definitely introduce you to the concept of S-Corp. If you're making, $40,000, $45,000, $50,000 a year as a 1099 or more, again, S-Corp, this is the entity that you need to kind of trust on, and this is your bet, your investment for 2021. What it means, as an S-Corp, again, some processes, Q&A, formations, and I hope, again, you'll have a very interesting and dynamic next, 50 minutes. You give you an energy for the rest of the week. But want to start with some statistics. Again, the reason we are going after the world of self-employed is that we believe that the world of tax and accounting is geared more to corporation. If you're a corporation or W-2 employee, it feels like that that the system is geared and give you more solutions. While as a self-employed, beside the fact that you feel lonely, beside the fact that you need to manage all of your client relationship and find your customers and do, all of this front, of the office work, you also have the burden of managing your own back office financials, the invoicing, collecting your receipts. I'm not sure what's deductible. I'm not sure how to organize my financials. And we see that statistically, it caused a lot of financial burden on the self-employed. 90% of self-employed real estate agents are still in the wrong entity structure. As I said, if you are still a sole proprietorship, single member LLC, in 2020, you really need to think about being an S-Corp, being a corporation, being the most efficient tax entity structure. Stop using paper, connecting all of your data into cloud accounting and cloud computing. Pull the data so you can make smart decisions, not based on hinge and ideas, but based on real numbers. Own your accounting. Again, if you don't outsource your accounting to a bookkeeper, which you must, or to formations, and we speak about our solutions later, again, make sure that the accounting and the numbers are clean. And the most important, find ways of how to reduce your tax liability. The taxes in the world of 2020 are not a dead end. Taxes is not something that, again, that you it's something that you have to pay, but you don't. It doesn't have to be a burden. We believe that taxes is the largest unmanaged expense of the business. People will think about their marketing and sales, their expenses, their overall kind of these small things, but tax by far is the largest expense of the business that people tend to ignore. And again, in tax court, Judge Learned Hand, many years ago, already point out that in the United States there are in a way two tax systems. There's the one for the informed and one for the uninformed. Those that are uninformed, will just pay more. Those that are informed pay less, still legal. So the IRS and the state and consultants like us providing you access to knowledge and ways of how to reduce your taxes, use it. It's there for you to use, and stop pushing back about all of these philosophies about I'm going to get audited, it's complicated, it's distracting. We'll show you how easy is if you just put the intention and the attention. If you put the intention and the attention to take one thing of the business which is so critical to fix, I would definitely encourage you to think about your 2020 and 2021 taxes. Brian, good morning. Great to see you.
Good morning, Shahar.
So Brian is in Oregon. So we are running this webinar all over the Northwest. So if some of you are out of state agents, we can also address out of state questions. But the idea, and I want Brian kind of to share with us a little bit more about his philosophy, because again, Brian is a tax guru, his guru-ness around moving people from being an inefficient to a super efficient, also involve very clear and lean processes. But Brian, I know that we have only 2 weeks before the end of the year, but like everything in life, people come to reality at the last minute, and filing their taxes on April 15 in 11:59, or in October 15. Come December 2020, weird year. Walk us through the basics of how I am as a real estate agent, if I can put my money on a couple of things, surgeries, urgent thing that will keep me more money in your pocket. How do you save me more tax, before the year ends?
Absolutely. Shahar, as you mentioned, we only have a few weeks left. So if you want to make movement before the end of the year, I highly recommend you reach out to your tax professional as soon as possible to make sure you understand the mechanisms at play. But some of our best end of the year strategies for customers is, number one, if you have extra cash flow and you want to put it in retirement, do so. If you've not opened a solo 401k yet or don't have an SEP, get on the phone with a financial advisor, whoever your brokerage firm is, and say, I want to open this account by the end of the year and fund it. This is a great tax saving mechanism. You can save money on taxes today. You're saving money for the future. There's also lots of cool plans out there that allow you to take loans or do Roth components. So get involved in the process of saving for your retirement. As most self-employed people, it's the last thing on their calendar. And as you start to get to that 50 or 60-year-old age range, you start to get a little freaked out when you don't have that big pot of money waiting for you. Secondly, make sure that you're understanding the home office and auto deductions available to you. These are really great deductions that you should not pass up. If anyone's advising you to not take the home office deduction, they're probably wrong, and you need to do a little bit more understanding of why it is. The trade-off of taking the deduction today and the reduction in basis, it's not a good argument. So talk to your financial professional. If there's any expenses that you can prepay for next year, most customers in the real estate market are all cash basis, which means if the money goes out of your account today, it counts for 2020. If it goes out of your account on January 2nd, it counts for 2021, regardless of when the invoice came in. So prepay your expenses as much as possible to bring down that taxable income if you had a really stellar 2020 year. If you are an S corporation, you want to make sure that your health insurance premiums are ending up on your W-2. This will save you both the FICA taxes and your regular ordinary tax. No matter what, even if you're not an S corporation and you're just a Schedule C, don't overlook that self-employed health insurance deduction, as it helps you save taxes. So make sure that you're telling your tax professional, or you're putting it in TurboTax, hey, I have health insurance, I'm paying for it out of pocket, and I need to get my deduction. Then if there's anything that you can do during charity, 2020 has been a really interesting year. Lots of good organizations out there making sure that people are getting rent assistance, food assistance, and everything necessary. You can really leverage these at the end of the year to make sure that you're bringing down your tax liability. Even if you're not itemizing your deductions, which means that you don't own your primary residence, the 2020 CARES Act gave a $300 deduction for charity contributions for anyone who's not itemizing. So please make sure that you put the $300 credit or deduction on your taxes and don't miss out on that. And if you're thinking, I usually don't get a deduction for this, why would I give to charity? The answer is this year, at least up to $300, it's a give me for you. So please make sure and involve yourself in that, and talk to a financial professional if you want to do anything like a donor advised fund, which is a really complex topic that I'm not going to cover here. But if you have some long-term assets, consider using a DAF. Finally, if you have any of your kids, college age or teenage age, that are doing work for your business, as long as you're at one of the higher tax brackets, so above 24%, there could be some tax savings available to you by running some payroll through them and paying them to do, your social media post or put out signs in front of your showings, anything of that nature. There's really elaborate tax strategies to bring down your business income, and it makes sense when you get to the higher ranges for sure.
And again, I think what Brian is saying, again, this is like we pick, the 6 things that we believe, are easy to implement. If you are already an S corporation, great. If not, again, we will show you how to become one, but there is some other benefits that as a sole prop single member LLC you can do. But again, you can see that part of the discussion, it's a new language. So, okay, SEP IRA, what is a FICA? How do I pay kids? Again, ask those questions. We want you to be familiar with these concepts, because if you get to know more and more of that language of the world, it will be just easier for you to be part of it. And again, we have a list of probably 60 or 70 other items that some again will be applicable for you, some will not, but at least it's kind of to unlock the I don't know what I don't know and start getting an idea with fun concept that may save you money. Brian, just walk us through just for a deadline, just because last year was a weird year, 2020. IRS just mess up with all of these deadlines. I really, really hope that because of the election and COVID and whatever, we're not due for another mess up with dates. But assuming the 2021 tax season is going back to be a regular year, what's kind of the critical dates that people need to be really, really aware of?
Absolutely. So the next 4 months are kind of a whirlwind of dates that we need to be aware of in the financial industry, especially regarding business taxes. So there's 2 pieces. You're either an S corporation already, or you're a Schedule C filer, which means that you're either unincorporated or just a disregarded entity. So I'll cover the dates for both. First and foremost, December 31st is the final day to run payroll if you're an S corporation and fund employer contributions to retirement. So this is going to be your elective deferrals. Those have to be received by your provider by the end of the year. The second important date is January 31st. January 31st is when your 1099s are due to your providers. So just in the same way that you may receive a 1099 for services rendered to another organization, anyone who's providing services to you that you pay over $600 in the calendar year, you need to provide a 1099 to them by law. And so the exceptions are if you're paying by credit card, but mainly if you pay someone to provide service for you and they're not an employee of your business, you owe them a 1099 in the same way that you get one, and failure to do so comes with penalties. Then also, if you're an S corporation, you'll get your W-2 by January 31st. If you're not an S corporation, you'll get your 1099 from your provider by that date. If you do become an S corporation or are already one, March 15th is a really important date. It's 1 month before the regular tax filing deadline of April 15th, and it's where your business tax return is due. So you will need to file that business tax return prior to your personal return. Again, this is just for S corporation owners. If you're still just a disregarded entity or a sole proprietorship, your regular due date is April 15th of 2021. I suppose there is a date I forgot here, which is January 15th, and that's if you have estimated payments. Please make sure to pay the IRS on time to avoid your penalties. This is something you should do yearly on a regular basis. So April 15th is the due date for your personal tax return. It is If you file a Schedule C, it is part of your personal tax return, and you can always file an extension. Both the S corporation tax returns and the personal tax returns are eligible for a 6-month extension. However, your tax is due on April 15th, regardless of an extension. An extension to file is not an extension to pay, which means any unpaid amount by April 16th will start incurring interest and penalties for not paying. So we want to make sure that you're taking care of that part. And then finally, the last 2 dates of the year, one of them's on here, one of them's not. September 15th for S Corporation's extension due date, and all of you are probably very familiar with the October 15th extension for personal tax returns.
Perfect. So I want to jump into 2021 just because keep in mind that everything that we were going to share with you about 2021, a lot of what these concepts are still available for 2020. But because again, there's like 2 weeks, before the end of the year with Christmas and holidays in the middle, it's just sometimes it's hard, to make some of them because the organization that we depend on, financial institutions, the state, the IRS are getting into some shutdowns and times that things are really slow. So again, what we want to make sure, again, Kobe and I had a discussion about the profile of the Showdigs and customers and real estate agents that just starting. This is an amazing or early adopter of the real estate or businesses that are not making yet, the 6 figures and they're on their way. 2021, it's a great year to think about your business as a business. And the number one thing that we want everybody to get out of this discussion is it's time to incorporate. The world of sole proprietorship is in a way is disappearing. Everything is moving into a fast-paced, business. And LLC, single member LLCs as an incorporation structure and an S corporation, which is the golden structure. If you're making actually $60,000 and more, it's a must to do in 2021. We can definitely walk you through the process of how to incorporate and how to walk, step by step, and we'll do it a little bit kind of through the presentation, but it's not as complicated as you think, and there's so many tools, including formations, that can do it for you without you to need to do anything else. But it's just a mindset, and the reason to do an incorporation is running because there's like a couple of things that are super critical. I will cover kind of usually we break it into 5. I would cover the next 2, and then Brian will cover. But if there's any specific questions about each step, again, I remind you, put some questions into the Q&A. It's really important for us to understand, just because, again, it's a new language, it's a new kind of territory sometimes. So we just want everybody to feel comfortable. But the asset protection is just it's a must. It's a critical, element of protecting what you're doing at the moment. You're building some asset, and you're building some reputation, and you're building like financial wellness and strength. And the incorporation structure is just put another layer of personal protection. A limited liability company has a limited liability protection. It's forced you to have separation of assets between you as the individual and the corporation. Most of the activity that you'll do under the corporation will be protected, from your own personal stuff. So again, protect your hard-earned money. You're working so hard, to bring those customers and generate, income and revenue out of it. Make sure that you think about in the protection layers. Again, LLC is not replacing insurance, E&O, D&O, all of those insurances that the professional need when he's doing business. But again, the limited liability protection, it's one more umbrella protection. And I'm not talking about, just the protection itself, it's also protection of the brand. What we see, and this is why I start, the sentence by trust yourself, trust the business, trust basically that what you do create basically a branding recognition around your quality as a professional in the industry. Building a brand is all about representing yourself in the high level of professionalism. And what we see as a byproduct of people moving from a sole proprietorship, single member LLC into the corporate world, something is changing in their mindset. Something is just clicked to the fact that I'm a real business, I'm a real corporation. And then it helps to set kind of the mind around, how to treat yourself more seriously. And when you treat yourself more seriously, as again, you become more intentional and you pay attention to things. This is where we see a high level of tax efficiency or money savings coming into the business owner. And this is a concept that we really kind of want everybody to embrace. It's not just about the tax saving, it's about how you run overall your business. But as we said, in our opinion, like LLC, it's a great entity, for limited liability protection, but it's not enough for us for the tax efficiency. So we said that LLC, in some slides we said LLC suck, just because, again, we want to tell you that LLC, it's nice to have, but it's not the end result. LLC is just halfway to, the most efficient tax structure, S-Corp. And Brian, when we were saying, S-Corp, is the way to go. S-Corp, time is now. S is the best. The number one thing that we see as a benefit of an S-Corporation, S-Corp, it's a great tax saving mechanism. In a way, it stopped bleeding, some unnecessary taxes in the system. Walk us through kind of, the tax saving concept.
Well, if you're not a tax professional, this might be a little complex, but I do want to tell you there's plenty of time to answer questions about this. You have plenty of time to figure it out and to learn more. So I encourage you to start to understand these concepts. But the idea of moving from an LLC to an S corporation is telling the IRS that you want to be taxed in a very specific way, which allows you to set a salary component and a profit component to your net income. And by doing so, you can control the amount of Medicare and Social Security that you pay over time and make sure to achieve your retirement goals. So the idea is you create an LLC and you move into this beautiful S-Corp structure, and now you need to go ahead and have a salary from the business. So what a salary means is that it's a W-2. So Shahar, could you do the next slide for me if you don't mind?
Sure.
Great. So first and foremost, top producers are all S corporations. I encourage you to speak with all of your colleagues who you admire and the people that have been working in the industry for a long time, and understand when did they move to an S Corp and why. They'll have a lot of good experience for you. And being a top producer means that you're gonna save more tax by being more efficient. So when we talk about the taxes associated with income, we wanna think about self-employment as all net profits are taxed at both self-employment taxes and regular taxes. But when you move into the S corporation instead, you're going to break your income into two separate pieces. You're going to have a salary, which is $32,000 in this example, and a profit, which is $48,000. And in that example, you're going to see there at the bottom, if you were in that square at the bottom, the green one, $11,304 is how much you would pay just in self-employment taxes on $80,000 of income. This is the Schedule C situation, which most of you have been accustomed to if you've not yet moved to an S corporation. When we go ahead and we split out the $32,000 and the $48,000, all of it's still subject to ordinary income tax. You don't get out of ordinary income taxes. That's not how it works. But what you can work on is that on that $32,000 salary, that's the only place you're paying that 15.3%. So in this example, you're at $4,896. So when we look at $80,000 of profit from a business, so this is $100,000 minus $20,000 of expenses split into salary and profit, you're going to end up saving $6,408 just on self-employment taxes. And this is the #1 savings vehicle of an S corporation. Salary is a complex topic. We can talk till the cows come home on it. I can inform you of how we do salary studies, but basically you want to make sure that you're taking some salary, and we want to make sure it's reasonable. So here's a great, Stephanie's one of our favorite clients. We did a late S election for her, which is another concept we can talk about, but she ended up saving $14,000 in 1 year. So she's an exceptional case. I don't say that every person would enjoy this much, but you could enjoy something very similar depending on your net profits.
And this is, Brian, I want to make sure, this is real money in the pocket. Like when we're talking about $14,000, this is something that we just need to, again, emphasize. $14,000, someone can just, stop for a second, close your eyes and reimagine what can I do, or I can tell you what Stephanie did, but think about what can you do with an extra $14,000 that is not going to the IRS, but in your checking account to do something.
Absolutely. And one of the coolest things about this is not a one-shot pony. You can do this year after year after year after year. And although you may see some years where you have more income and your tax savings diminishes, if you're netting an extra $4,000 to $14,000 per year and you decide to do something really smart, like put that into retirement, you've made some of the best financial decisions that you can make without needing to do more work. And that's what the real benefit of the S corporation is. You're not doing more to get more money. You're doing the same. You're just preserving more of it for yourself. And you want to balance, what do you do with that extra funds? So, these are really high level conversations, but again, every single year you'll enjoy savings from an S corporation. And when you start to add up 10 to 20 years of being an S corp, it's quite a bit of money, especially if you do the right thing with it.
Now, we were talking about tax savings as one, but what we see, and again, Brian and I managing, thousands of accounts, so we see, the tax savings is really interesting concept that actually, it's the one that can be the hook. But what we love the most is the benefit, because this is kind of the financial well-being. This is, how it actually, convert this dream business into a machine that save more money and well-being for the family. Why people are so missing on benefits and stuff?
Yeah, well, so like Shahar said, the self-employment tax savings is definitely this beautiful item that we really enjoy. But when you go ahead and layer on additional benefit information on there, you're going to save even more, and you're planning for the future. So when we're talking about it, the first thing you can do is a 401k. And although you can do this in other structures, the S-Corp allows you to get a maximum in for the lowest barrier of entry. So you can put away money to the future, save taxes today, and if you're really smart, you can maybe do it in a Roth component or on a loan option, and you could use that money here and there for short periods of time with no consequences. So adding a 401k to your S corporation is a phenomenal reason. Second, you can do things like HSAs. An HSA is a tax deferred mechanism where you're pushing money to the future for medical expenses. It grows just like any retirement program. And as long as you're on a high deductible plan, you're eligible to do so. And those are deductible. You can also do FSA for dependent care if you have children under 13. And you can optimize your health insurance. Health insurance for the self-employed is one of the most complex and nasty topics in the world. But if you do it just right through your S corporation, not only can you save the Medicare and Social Security as part of your salary, you still get your self-employed health insurance deduction. So you have a double savings on the medical insurance, which kind of brings medical insurance into a reasonable category instead of an astronomical one like we see for self-employed. So as I said, the first thing that you see the self-employment tax savings. This is the $6,408 that we spoke about. That's just about self-employment taxes on $80,000 of net profit. When we go ahead and layer on benefits like 401k and health insurance, you actually start to save more in your system. So although everyone's results are different, on an 80K income with various amounts of health insurance with one dependent and filing single, we're going to be saving around $12,623 for this client. This is a real client example. This isn't, I think they made $82,000 instead of 80, but we try to keep it really nice and round. These are real savings available to you. Some of them, when you're putting more money to retirement, it doesn't mean that you get to play with the money today, but ultimately it's going to save you taxes as well as build for your nice financial future. So this is where you take your S corporation from saving some money, $6,000, to almost double $12,000.
And then the question comes, if we take so much money from the IRS and we do all of those changes and noises in the system, I'm going to get audited, the IRS will not approve it, all of these pushback and statements, I know, and probably that actually it's the opposite.
It is. There's been lots of financial studies about this. The New York Times and Wall Street Journal have put out information specifically citing the amount of times that a Schedule C filer is audited compared to an S corporation. Here's the deal. when you become an S corporation, you're committing yourself to being financially stable with statements and payroll and all of these pieces that are already being reported to the government. This means that they have information to cross-reference for you, and as long as there's nothing out of the ordinary on it, they have no desire to look into your books. This is much different than those Schedule C filers who have a box of receipts in their garage, throw every mile on there that they can, and don't have an advanced accounting system. The best news is even if you are audited, because of the way that an S corporation works, you need to maintain books throughout the year. And because your books are up to date, you immediately can provide them without any additional work. So the fear of audit should disappear as an S corporation. I'm not saying it doesn't exist, but as long as you're on top of your business activities, even if it did exist for you, it disappears as quickly as it's around because you have everything to back it up.
Yep. So I hear just opportunities around S-Corp, but this is true. Again, we are doing it for many years and thousands and happy customers. And it's really, it is what it is. The IRS love, at the end of the day, S-Corps, just because they put orders in their system. Brian, we're talking about this threshold. There is a huge benefit for if you're making, these 6 figures and what. But again, if you're a new business, start making, 30, 40, 50,000, 60,000, what's going on with my threshold for income?
So Jose, I've been watching the Q&A, and this one's for you, or anyone else who might be in that range before the 60K. So I'm a tax man. I believe that being an S-Corp is the most efficient structure. You should do it as soon as possible and just wait until you're making enough money for the benefits to outweigh the cost. However, we want to be really sensitive that on a budget, you want to make sure that you're getting more than you're putting in. So in anywhere below $60,000, your tax savings might about equal your cost of operation for the S corporation. So in those circumstances, we recommend that you build an LLC, start to get familiar with the S corporation, and maybe move forward if you know that your horizon is going to be making more than that 45 to 60K a year. However, if you're already in the 60K plus a year category, you're paying more taxes than you need to and more than your fair share. So we really want to encourage you, if you're going to have a 60K year or greater, go for the S-Corp immediately. There's no reason to delay it. If you're still growing, it's no harm to have that LLC for the liability protection that Shahar spoke about, the brand credibility that Shahar spoke about, but we might want to wait to turn on the S-Corp up until the point that you're really making enough net profit to yield the benefits that we want to see. We don't want to do all the work just to save $25. That doesn't make any sense. We want to make sure that you're netting quite a bit of savings.
Nice. So we're about kind of 20 minutes to the end of this to the webinar. Gabby, we spoke about to allow to speak to audience about specific questions. Brian and I worked out some questions that will again give the audience some of the language and feel comfortable about what we want to ask. But do you want to start maybe sharing with us maybe some questions from the audience? Or
yeah we have a couple questions actually. So one person who's a real estate agent asked that since they drive a lot for their business, is there fuel maintenance cost deductible to their business for their vehicle?
Absolutely. So, well, it's complicated. You almost always benefit more from what's called the standard mileage deduction. In 2020, that is 57 or 58.5. I apologize. It changes every year. Anyway, it doesn't matter. It's somewhere in the 55 to 60 cents a mile range. That component includes gas, maintenance, depreciation, insurance, and everything. If you think about it this way, if you were to drive 6 miles, you would have $3 worth of deduction. That is about the cost of a gallon of gas. So you're making more by using the standard rate than the actual expenses. You do have the option of buying a vehicle in the business name and taking the actual, although it's highly discouraged because of the record retention requirements and the disposition of business assets at the end of the time that you're done with the vehicle. So really, the standard mileage rate is the way to go. Way easy for record retention, benefits you more. You don't need to worry about how much did you use business versus personal. You just report your business miles, and it's really clean that way. Great question, Gabby.
And sometimes, by the way, it can be, double or triple, your actual, just because, again, we see that gas prices are dropping at the moment. And again, 2020, it's a weird year just because agents didn't drive as much. So maybe again, the actual can be more, but again, but these two ways that you can evaluate every year in a different, we force you to take the one that will give you more deduction to save you more money.
Perfect. So we have another question that came in. So what would be a good source to establish an S-Corp, attorney or another source?
Formations. We are really good at setting up S corporations for you. So an attorney can do it as well, of course, and you could self-serve on the Secretary of State website, but you want to make sure that it's set up properly. So we do have a special offer here at the end, and we'll talk about that, but we would love to set up your S Corp for you. The first step is the LLC. The second step is the S Corporation request to the IRS. So this is what we do every day. It's in our name. Formations stands for forming businesses and handling S Corps. So please reach out to us after the program, and we can kind of guide you through the process and what it would look like. One of our sales representatives can help work you through what it looks like, and we can take it from there.
Cool. And I think you guys answered this earlier, but is it too late to set up an S-Corp for 2020?
This is complicated.
I know there's only 2 weeks left.
If you have an LLC created before now, you can easily do it, and it's no problem at all. Creating an LLC this year, late in the year, and requesting to be an S corporation is really pushing yourself into the grayer area of what's allowable. So we want to, right now where we are in the year, if you don't already have an LLC created, that's okay. You should create an LLC and work on it 2021 forward. However, if you already have an LLC in practice and was built before now, even if it was in June or May or any time before now, we can actually go and still go do a retroactive late S election and say, oops, I meant to be an S Corp, no problem. But if you don't have an LLC generated pretty much as of today, you're probably looking at 2021 and forward.
Cool.
Brian, let's leverage just for a couple of more minutes this specific subject that Gabby just brought on. So again, what's the difference between S-Corp and LLC? We hear a lot about this confusion. Is it kind of complicated to transition from an LLC to an S-Corp? Again, what is the suggestion to have an LLC with an S-Corp versus, a C-Corp? Give us like the 1 minute kind of, spiel around just LLC, S-Corp, C-Corps. And if we can make it just a little bit more clear.
Absolutely. Some of our other presentations go into this much more deep, but for here, we're going to keep it really simple. Number one, an LLC is a legal entity. It has nothing to do with tax structure. So what you're doing when you're changing from a legal entity to a tax structure is just you're electing to be treated a certain way. The process itself is very simple. It's just a form that gets submitted and approved by the IRS. Afterwards, you have some requirements that you need to meet, but actually converting from an LLC to an S-Corp is only a tax designation, not a legal structure change, and it's very simple to do with filing a Form 2553. Finally, on this line, which we'll have some more questions, don't worry, is why is it suggested to be an LLC instead of a C-Corp? Mainly, it's about how easy it is to start and operate an LLC as opposed to a C corporation. A C corporation has requirements with the state and federal agencies of how you operate the business, what notes you take, and board of directors and various things. An LLC is this very simple, easy structure that has a lot of flexibility in it. If you go with a C Corp, you're going to be stuck. Then we get a lot of questions about reasonable compensation. What is reasonable compensation? How does it work? It's important to know reasonable compensation, salary, and payroll are all interchangeable terms. And reasonable compensation is basically how much would you pay somebody else to do the job? So most businesses enjoy profits, which they should, so that it doesn't mean that all of your net income should go to salary. Only a portion of it should. So what we do is we do a reasonable compensation study for you and make sure that the decision that we made of how much your W-2 is defendable with the IRS using really cool algorithms. Second, can you take money out of your S corporation? This is called distributions, and you can take money out of your S corporation anytime you would like in the exact same way you've done as a Schedule C. There's no difference. They're categorized as distributions, which means you've taken money out of your account. You do pay taxes on those distributions if it's beyond your basis, but that's just in the exact same way that you've already been as a Schedule C, just that you save that FICA, the Medicare and Social Security, on those distributions. And then can you put funds into your account? Absolutely. These are called capital contributions. Capital contributions create basis so that future distributions are not taxable. Again, super crazy tax terms, so don't worry about it. We'll help you through the understanding. But yes, you can put money into your business, which is creating basis and later take it out tax-free since you already pay taxes on those dollars.
And again, the last set of questions, I think we kind of covered, there is definitely a way to hire a spouse, significant other, kids into the corporation. It's very beneficial for retirement purposes and tax savings. If you're making less than 50, 60,000, again, if you're a young business owner, if you're new to the industry, this is the way to do business today. It's the same as you creating yourself and the marketing space, or the sales space on social media, and use all of the most advanced tool today to be out there in the cloud accounting, cloud computing, being an S corporation. It's a must entity, for 2020. This is the new way, or rethinking about how to reimagine self-employed. And again, and the time to do an S corporation is always, it's now, it's never late. Even if you won't get the full benefit for 2020, start strong from January 1st, 2nd, as the year, started, and boom, put your efforts to be really efficient in tax savings and overall making money for 2021.
We did have a really good question come in, Shahar. And the question was about lendability and how does this affect your lendability? And I'll just take 1 second to answer it. Every mortgage company and mortgage broker knows how to evaluate S corporations. If they don't, you should find a new one. Both your income, your income is two components, your W-2 and your profit from the business. Both of these are on your tax return and are part of your adjusted gross income. Your lender will use your AGI to determine your amount of lendability. Although some people originally look at the W-2 only, if you inform them that you're an S corporation, they have separate formulas to use for S corporation owners to determine lendability. So it's not just your W-2, because both your profit and your W-2 are taxable. Those are both considered when you're looking for lendability.
Cool. So we also had one other question come in. So do you each work with new clients, or do you have associates who do that?
Well, we definitely have a team for everyone. Shahar and I sit in a lot of the vision and the application of the business. We like to work with all of our clients. As a growing company, much like your company, doesn't mean that necessarily we can work with every client, but we do have a really skilled set of team who are on the tax and accounting side, as well as professionals to help you get on board. So we design the systems and make ourselves available for the highest level of consultation necessary. But just like any business, we're not always available to every client every moment of the day, but we do our best to keep it that way.
I think that, again, when we speak about the why, yes, and always kind of pushing forward the concept, there's always, the pushback, the one that basically is doubting, kind of, and we get a lot of kind of, so what's wrong about S-Corp? Why? What's the catch? Is it too good to be true? Or why not everybody, is adopting S-Corp? So again, we spoke about why top producers or everybody that understand, money and understand how they treat themselves more seriously, there's a high adoption of S corporation. But again, it's require behavioral changes. It requires some understanding of economics. It's some understanding of just basic changes. I need a new bank account, and sometimes people just locked, into some old kind of, fashion habits, and this is what we're telling, S corporation user. Trust the system, move away, let yourself be a real estate agent, with your customers, with your front of the office. Let the back office, in a way, run by itself. And this is kind of what the formation concept. It's not another do-it-yourself, solution. It's about, we will do it for you while you'll stay, very focused and get your time back. So if it's cost too much, or basically, it's too complicated, so again, but we save a lot of money. So are you willing to pay, $3,000 to save $12,000 a year and get access to professionals and get access to concepts that constantly make you better and better and better? I would. And if it's too complicated, just don't do it. Let someone else basically managing the things for you. The same as you see that management properties and real estate agent managing complicated transactions. When I'm selling my home or manage my rental properties, I'm using a management property and a real estate agent. I'm not going through do-it-yourself, software, leaving money on the table. But because again, keep in mind that you can do S-Corp management by yourself. You can do all of those things. It's just how much time it costs you and how much money at the end of the day, you're living on the table, and the time is now. It's time to make money. Real estate industry is hot in the Northwest. It's time basically to capture all of those opportunities and not, messing up with your head why I'm not successful because my time and my energy and my attention is put on things that actually is not generating income for me. And this is why, we started Formations. We started Formations as a full, complete financial management for self-employed to take all of these things that you hate and we love. We love all of these tax and accounting nuances, and you can see that Brian and I passion about tax and accounting. We feel that this is as sexy as marketing and sales and other areas of the business, just because again, there is an aspect of gratification that we cannot delay. We make changes. We see people growing. We keep more money in people's pocket. We see the drive of business ownership by them letting go those tasks that they didn't sign off to do when they become business owners. So we said, again, Formations, we walk you everything, we own your annual journey on your tax and accounting from incorporation. Picking your name is probably the most difficult, task that we'll ask you to do, and by the way, it's not easy, come up with the name. Again, go figure. All of the names in the world are already kind of been taken. So think about a name. We will walk you through all of this concept, but we will do the incorporation for you. We will connect your new entity into new business banking. We will define your salary, your reasonable wage, the mechanism that will save you so much money. We will walk you through, set of benefits. Again, think about it. It's almost like we become your employer at large, in the onboarding process. We'll give you all of these benefits, but the basic is that you are an amazingly free to do whatever you want to do on the front end of the business. Again, once we start calculating your revenue, money comes into the business, we will monitoring expenses, the payroll, the salary, the benefits, distribution. We'll give you reports. We'll give you access to what we call the state of the business. We'll make sure that you're aware how much money you're making at every point of time of the year. We will make sure that you pay the least amount, but fair, again, amount of taxes, and we will increase your take-home money. We will guarantee you that at the end of the day, by using all of those components of the business, you will keep more money in your pocket. And again, this is just to show you that it's a full service, bookkeeping, accounting, tax, audit, everything that, we spoke earlier. I think that what's important for us is that many real estate agents, main brokerage in the Pacific Northwest, and actually we're operating now in few outside of Washington State. We're in Arizona, we're in Colorado, we're in Texas, we're in Oregon. We can be everywhere. It's just a decision for us to grow a little bit more, consciously around, where the markets of real estate is strong. But real estate agents are using Formations and basically love the fact that we either took, things that they hate to do, bring them more time, save them money, reduce the chances to get audit, bring basically the peace of mind. And the idea is that, we want you to be really successful in what we do. And as Brian said, in order to even reduce some barrier to entry into the S-Corp world, if you sign with your Formations, by December 25th, before the holidays, we will do all of the onboarding for free for you. It's about $1,000 package. We will help you to set up the LLC. We're not paying the state fee, the $200 that it will cost you to be an LLC in the state of Washington or other state, but all of the configuration of your S-Corp, the S-selection, the connection to the banking, the accounting software to help you to reasonable compensation, to do some review on your taxes, give you some consulting for your specific design a plan for you for 2021. Everything is on us. Just join, just come, so we can make really, a change in your life. Formations is everywhere. You can follow us on our YouTube channel. We have a lot of content in our website, in the blogs. We share a lot of information. Pick up the phone, give us a call. Again, I'm available all the time. Text me and I'm yours, for half an hour. Pick up your brain, pick my brain, pick your brain about the things that you really care about. I always have things to reflect on and share ideas. Just do, just act, just move. Let's break the status quo. Let's create a movement of the self-employed, that we stop bleeding unnecessary expenses and taxes in 2020. We leave this weird year behind, and start really great 2021, also with an S-Corp. Gabby, we have a couple of more minutes just to cover a few more questions, or are we done? What's going on with our audience?
Yeah, it looks like we have some questions about past compliance. So I'll just take it, Gabby, just for the case of time. So if you're out of compliance with past filings, you should engage with a professional and get cleaned up and go forward moving strong. Formations focuses on S-corporation filing. So we are not the firm to help you with past out of compliance personal tax returns with Schedule Cs, unfortunately, but we can give you a referral to another organization if you'd like that can do a really good job for you. If you have past out of compliance S-Corp tax returns, we can definitely assist you in that category because that's the work that we do. But when it comes to personal tax returns, we don't file personal tax returns for clients in our current structure. But if you are a Schedule C filer below $60,000 a year in net income, and you would like someone to help you with your bookkeeping so that your P&L is up to date, your miles are tracked, and everything that you need for a successful tax season is completed, for you to either use TurboTax or to use a professional personal tax preparer, we can do that for you. We have a program that is for what we call our incubators. They're for our Schedule C filers who are getting ready to be an S-Corp, but they're just not there yet. It comes at like quite a bit of a discount from our regular fees, since you don't have to do payroll and everything of that nature. And it's just to keep you in really good hygiene with your business so that at the end of the year is not a nightmare for you. And you have an accountant, you have all the bookkeeping done and all of those steps that we get. And then the second you're ready to move into an S corporation, we can turn it on for you. But in terms of past out of compliance personal tax returns, unfortunately, we're not the solution for you. We're just not designed for it. But we do have our other company that Shahar founded and that I used to work for as well. We can give you a referral. They can handle your non-compliance. And then what you want to do is going forward, don't get behind. Being behind on your taxes is not a good business decision, and it puts you subject to so much more scrutiny from the organization. So the IRS, state agencies, Department of Revenue, these things you do not want to mess with. You want to file on time or on time with extension, accurate tax returns so that no one blinks an eye at your system. The second you file paper tax returns for past years, someone human at the IRS is going to look at those and decide if they agree with what you put on your tax return, which is much different than an electronically filed return.
But we also saw just one more point about how important clean financial was in 2020 when the government introduced the incentive and the stimulus package, the PPP and the IDLE, how fast Formation's customer could approach immediately, into the plan because they had clean financials to show the government actually they are qualified. So again, another area, and we'll probably do another big stimulus early 2021. Have a clean financials will allow you to be first to this money that can help you to survive maybe a tough early 2021.
Perfect. Well, I don't see any other questions. Thank you guys so much. I know I learned a ton, and I'm sure our attendees did too. Thank you guys again for hosting or being our guest speakers, I guess, and teaching our agents how to be tax ready.
Thanks, Gabby, for hosting us. Kobe, thank you so much. You're doing great things for the real estate community. Good luck also for you guys for 2021, and hope that we can do something like that again together every quarter, just to educate, real estate agents on topics that are relevant for their financials. So thank you so much.
Totally.
Thanks so much, guys.
Thanks, guys.
Bye-bye.
Have a good day.